in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast, Markets with Shawn Hackett. Shawn is a financial advisor with Hacket Financial in Boca Raton, Florida. And Shawn has been on the podcast here for quite a while, and we've talked about a lot of different stuff. But this podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. Tractorzoom, delivering insights, and Dry Shod Boots, the official work boot of the Moving Iron Podcast. So, Shawn, we were talking about this before we started recording today, and one of the biggest components of the U.S. corn market, and even soybeans to some extent, is the biomass market, right? So, the ethanol markets, the biodiesel markets, all the different sub things that come off of that, whether it's DDGs that come out of the ethanol market to feed cattle, and all these different things you see happening. That represents ethanol market's roughly about a third or so of the U.S. corn production, what goes into of the U.S. corn production, and what we see happen there. And right now, ethanol is an extreme premium to gasoline with what we see happening in the oil prices out there. So there's ethanol plants that are filing bankruptcy, closing down, going on furlough. They've canceled. A lot of them have canceled forward contracts where these farmers were getting, maybe anywhere from 10 to 50 cents above the board on some of the prices you see happen there, and that's going to start shocking the market pretty hard, I got to believe. What we saw yesterday was probably a direct correlation to the $93 million or 93 million acre prospective crop report that we saw come out, planted acres report that we saw come out, and all the computers said sell, so they sold, and they did a really good job of doing that yesterday. So I guess as you take a look at the ethanol market, at what you see out there, what's your perspective of that, and how much of an effect is that going to have on the overall corn marketplace?
One is psychological, one is time frame. And so the way I look at it is this: roughly 5 billion bushels of corn are used to produce ethanol, roughly. A third of it remains as DDGs, which actually is used as feed and takes away from corn demand. So it's not a 100% loss; it's a 2/3 loss. So we try to think about it. We think about it as losing. If the whole industry went away, we would lose overall 3.5 billion bushels of corn demand, because we would gain it by not having any DDGs available for feed, supplemental feed. So are we going to lose the entire industry? I guess the answer to that is, how long will the government keep the economy shut down? Because as long as the U.S. economy is shut down, that's how crude oil is going to remain too low for ethanol to compete, and for ethanol to be monetarily beneficial to anyone crushing it. Our view has been viruses are short-term in nature. They come and they go. We've seen it come and go in China. We've seen it come and go in South Korea. It's already going now in the EU. We're last for it to come and go, but April should be that, and we should start to see things firing back up again gradually here in May, and be full fire back up into June. With that in mind, that means that this temporary demand shock of loss from ethanol is a quarterly issue. We do not think it's a yearly issue. We think we will get ourselves back to a pretty healthy demand base. And those assets that are shutting down, we think will be taken over by the stronger players, and that production will come back into the market later on from those that have deeper pockets that don't have to go under right now. Kind of what happens with these things. You see the weak sell to the strong. The assets don't go away. They just get concentrated to a few hands instead of a lot of hands. And that's kind of what's going to happen in this quarter. Is these assets are going to shift, but they're not going to go away. We're going to see what we think could be very exciting demand later on in the year come back, but obviously not in the second quarter. That's kind of so. How low do we have to go right now to factor that in, one has to believe sub $3 corn cash probably does most of that.
Right.
Probably does most of that. How many acres are we not going to plant because we have sub $3 cash corn?
Right.
Versus what we would have planted. So how many bushels of corn production are we not going to have now because corn markets crashed because of the ethanol? We've argued that last year's crop has been overestimated, as it typically is, and that we would have expected to see in the June quarterly grain stocks report potentially 500 or 600 million bushels of less corn. But if we've now lost demand from ethanol, maybe we don't really gain or lose any. Like maybe the balance sheets actually stay fairly the same, even though people are fearful that it won't, because what we lose we're not exactly sure that the balance sheets are going to change that much. When we get it all put together, lower acres, lower quarterly grains in June, lost demand and ethanol, when we put it together, I think the balance sheets are going to be fairly close to what they've been all along before the market crashed to 335 with a widened basis. So to me, some places seeing 275, 290 cash corn, we think it's pretty well priced in, Casey. Everyone's talking about it. Every media outlet's talking about it. Every farmer is scared to death about it. That usually means it's priced in. Usually.
Yeah. Yep. Okay. So this Russia, Saudi Arabia bicker back and forth about who's a bigger player in the market and who can hold each other out longest, and obviously Saudi Arabia is going to win that. But like we've talked about on previous podcasts, neither one of these countries can afford to have $20 oil at any level, right? I mean, you just can't. There's no way that either one of them can function, especially when it comes to Russia, when you start really looking at what they've got going on. So last night, there's been, I guess they've had some talks and what have you. And so last night, Brent crude jumped up about 13%, and West Texas jumped up about 9%. I guess when you take a look at what's going on in the oil market, at what point, if they get their feud settled up and everybody kind of comes back up and we've got $40, $50 oil again, then the ethanol market starts to make sense, right? So I guess, do you see this as a short-term thing, or do you see this as something that could have some longer-term ripple effects?
As I just said before, we think it's a short-term thing, because the only way you can keep crude oil at $20 a barrel is you keep the global economy and the U.S. economy offline for longer than the next 30 to 45 days. I mean, it's offline until the summer, late summer. We do not see that happening. If you think about it, the only way that Saudi Arabia has leverage here is to do it while everything is still shut down. The minute that the virus starts to go away and the minute that everyone's firing back up again, they can't produce enough oil
to
keep the crude oil price down here. They know they are on borrowed time. They have to make a deal, in our view, within the next 30 days. They have to make a deal. Their time is running out. They're not stupid. They've done the research. They know what's going on with the virus. They're looking what's happening in Europe. It's already going away. It's already gone away in China. It's already gone away in South Korea. And we're next. So they're going to try to get the best deal they can for themselves before all this demand comes back for crude oil, and then they back away and say, cut a deal where everyone's happy. Sorry, screwed everybody. Let's all be friends again. So we do believe this is short term, and we think that it's going to offer. On this program, Casey, and in our reports, we've been talking about April being the low point for corn for months now. And here we are, second day of April, and we're seeing corn right into the window of reaching the lows. And we've been talking about this time frame being the time frame to look for a low, to look for an opportunity for, livestock, or if you're on the buy side of this market, to look at the corn market. And here we are. And so we are really excited, not that the corn price is as low, but we're really excited about the opportunity for this month to be the bullish turning point for corn, and to have a recoil rally back up and provide an opportunity for the farmer to get a better price. And the lower we go now, and the more we discourage farmers, and the more we discourage acres, and the more we discourage everybody, the better the outlook actually is for less corn available later on in the year. So unless you have to sell today, we think the outlook looks actually pretty good heading into the summertime. So.
Okay, yeah, and I agree with that because the numbers that came out of that report on on Tuesday there were very what's the best way to put that? Optimistic, I think, is the best way to put it. I mean, 93 million acres of corn is a big number, and there's nothing out there to say that we're going to get that. That's kind of what you've talked about in the past. That report is one of those ones like how much actually credence do you should even put into that, something like that, because same thing happened last year with the market when it came out. Everything was crazy. Then we had had this big number we're going to plant, and then all of a sudden a third of the country didn't even get to plant a crop, and then what they did plant was not good, and we had nowhere near that number, and we rallied up a buck there in early summer. So I don't know. I guess there's something.
So much has happened since the survey. Like so much, prices have fallen so much more since the survey. It literally makes a survey
worthless.
Quite frankly, worthless. With a shortage of toilet paper, maybe we should use the report instead.
Yeah.
Just take a look at the cotton acreage number. They had the cotton acreage number up.
Yeah.
I can tell you right now, 48 cents.
No. Yeah, they're not going to plant any cotton.
We're going to have we're expecting record low U.S. planted acres of all time.
Yep.
Not up from last year. So just goes to show you the absurdity of this report, given what has happened since the survey was taken. But of course, when you have a computer program and an inanimate object hitting the sell button because it sees the data point and it runs through the algorithm that says sell, short term, you can get what took place yesterday.
Yeah.
And we have to keep that in mind, that is not a permanent price. That's not a rational price. It's just what can happen on data streams from algorithms that use that for short-term gain. So.
Yeah. It's crazy, but it's crazy. That's all I'm going to say. All right, so today we have the weekly export report comes out, and again, they're not hoping for much to happen today. So I think so I'm looking at now. So corn estimates are somewhere between zero, none, and 100,000 metric tons. Soybeans are the same. Wheat is 150 to 450,000 metric tons, and they don't think any soy meal is going to get exported today. And soy oil is somewhere between 0 and 5,000 metric tons. So I don't know. I guess they're not expecting much, but the world is kind of starting to rebound. And like we've talked about here in the past, China and the countries that again started out early, having early effects of the coronavirus, and what that looks like, have come back online to some extent, and they're going to start bringing stuff to them. So if today we have a very positive export report, I guess what could you see that doing to the marketplace? Well,
I mean, we've already had some positive reactions to some good exports on given days. Right. We continue to see the ships waiting for unloading at China ports crashing, meaning they're cleaning up the bottleneck, they're cleaning it up, they're opening the economy, the ports are open, and that means they can bring lots more ships in now. So that their capacity to buy, their capacity to handle incoming freight is growing demonstrably every single day. And that means that the import engine from China every day is getting better and better and better. And unless the big one was, we can argue it was or it was not, it should be coming into the market, the U.S. product, especially on concerns that the coronavirus could enter a community spread problem in South America, and then maybe the supplies that they're anticipating may not be available or not be available in the time frame that they wanted. If I were the Chinese, looking at the whole situation and how crazy it's been and what might be happening during the winter time, I sure would want to secure some U.S. supplies when it was available, just in case they're not available down there over the summertime. And so I think that's going to bring them to the table, buy a lot of grain from us, clearly at a price that's very advantageous for them.
Right. Absolutely. Absolutely. Yeah, there's a big opportunity there for them to buy some very cheap stuff. All right. Well,
now in terms of that zero forecast for corn exports, I don't think it can go much. I'm not expecting it to go lower than zero.
Right. That's good. That's good, Sean. That's a good guess. I don't think anyone's going to be dropping anything off today, so I feel like we're going to be all right.
That's my forecast. It will not be negative.
Man, that's good. That's a great guess, Sean. Good job, buddy. That's a safe bet. All right.
It's a safe bet. Yeah.
All right. Well, good stuff as usual, Sean. This ethanol thing, I think, is something we need to keep our eye on, and especially as oil starts to rebound a little bit here. And like we said,
if oil starts to push into the 30s, Casey, corn's going to catch a bid.
Okay.
Sugar catch a bid. Those are the two ethanol commodities for ag. Sugar and corn have been decimated largely due to this loss of ethanol demand for sugar and corn. But those two could be the poster for leaders if we get this crude oil market start to move up and we have a deal after Mississippi economy's firing back up and we're heading back to 40 or 50. What we just saw to the downside, we could put it right back on the upside. And so we really do not believe this is more than a short-term affair. As dire as it looks, we do not believe this is more than just a couple of month affair, and that we're going to look back on this period and go, anybody could have known to buy corn back then. How obvious was that one?
Yeah.
And so we would view it from that lens. We have a little bit more of a longer-term horizon than the next month or two. So. All
right. Well, good stuff, Sean. If folks want to reach out to you and get some more information about what you do at Hackett Financial, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Our homepage has all kinds of information they can look at to see what we do might be valuable to your listeners.
Right on. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check out me on social media, Facebook, Twitter, and Instagram at Moving Iron LLC. Also, check out the movingironllc.com website for all the things that are Moving Iron related, blog posts and those kind of things. Also, check out Global Ag Network and all the great podcasters on there as well. So until next time, I'm Casey Seymour with Sean Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here.